Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, September 14th, a mixed day in the markets. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, corn up 2 1/4, beans off 1/2, and wheat in Chicago up 2. It's a pretty listless trade today. There's very little news and continued, overall bearish feeling in the market in light of big crops expected this fall. News out today was pretty light. There was some news out of Argentina where they expect a big wheat crop this coming year. Expectations are for a 15 million metric ton wheat crop in 2016-17, up from last year's 11.3 million bushel crop. The reason for the big increase is really the change in export tax policy that the new President Marco instituted after his election in December. That's basically stimulating wheat prices in Argentina and has caused farmers there to plant more wheat. On the other side of the spectrum, we talked about this yesterday, that Argentina's government may be slow to eliminate soybean export taxes, even though they promised that in their election last year. Other news out today, EIA crude oil numbers were bullish on the surface, with crude oil stocks coming in at 500,000 barrels lower than last week. That is versus a 3.8 million barrel build that traders had been looking for. But conversely, EIA's gasoline stocks numbers were higher than expected, coming in at 500,000 gallons more than last week versus 300,000 barrels higher than last week that was expected. Looking ahead to tomorrow, not only do we have weekly export sales coming out in the morning, but mid-morning we will also have NOPA's crush numbers for August. Traders are looking for a record large August crush of 136.2 million bushels for August. That would be off from July, but still above the record of last August in 2015 when we had 135.3. Other news, EIA ethanol numbers were supportive for corn. Production was up 6,000 barrels a day to top 1 million barrels a day for the week, and EIA stocks, ethanol stocks were off nearly 500,000 barrels, falling to 20.2 million barrels. Crush margins in ethanol continue to be favorable. That is helping drive more corn into ethanol use. So that continues to be a good sign, at least in this otherwise bearish market. Let's take a look at November soybeans. We talked about this yesterday, and today was really more about consolidating around the 940 mark. We did come down and test 940 briefly a couple times, but never really able to gain any sort of momentum below that. So, overall we closed around 943, but I would still look for that underlying support 937 as a testing ground here. And if we break that, I think there's still a good chance we go down into the 920 mark. I don't think we've seen the lows yet in soybeans. I think there's still, more concerned about oversupply as we move into harvest in the next few weeks. So watch for that 937 mark as potential support. That's all we've got for today. Join us tomorrow. We'll be talking about export sales and the NOPA crush numbers. As always, if you have any questions or want to learn more about how we can help you in your own grain trading situation, visit us online at grainhedge.com. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.